Hey everyone, I am here with the latest episode of our weekly Market Insight series, coming directly from the Capital Markets Trading Desk at SunWest Mortgage Company. Let's get to it. U.S. stocks and treasuries gained after the Federal Reserve concluded their policy meeting on Wednesday. On Wall Street, the three major averages kept rising after closing at new records. Treasury yields fell as investors digested the information from the central bank. Yields had ticked higher earlier in the week as investors took a cautious approach after last week's higher than expected inflation data. Federal Reserve officials decided unanimously to hold the key interest rate steady between 5.25% and 5.5% for the fifth consecutive meeting. Policymakers signaled that their previous forecast of 3 rate cuts in 2024 remains on track. The central bank is still waiting for more evidence that inflation is on the right path to begin the rate cuts, with Fed Chair Powell mentioning that the first reduction will most likely come at some point this year. Officials also indicated that they foresee fewer rate cuts in 2025 and 2026, and that economic growth and core inflation will be higher than initially expected. Home builders' confidence improved in March. The National Association of Home Builders Housing Market Index rose to 51 from 48 in February. The number of home builders offering some form of sales incentives remained stable. Meanwhile, new home construction bounced back in February, increasing by 10.7% to reach a 1.52 million annualized rate. Economists had expected a 1.44 million pace. The increase in construction and the home builders' optimism can be attributed to lower mortgage rates and a lack of inventory of existing homes. Mortgage applications continued their rate-sensitive trend, falling for the week ending March 15th. After 2 weeks of gains, MBA mortgage applications fell 1.6% after the average 30-year mortgage rate increased to 6.97%. The refinance index fell 3% from the previous week, while also being 3% lower than a year ago. Purchase applications dropped 1% from last week and were down 14% year over year. According to data released on Thursday, existing home sales increased to a one-year high in February. Higher supply and retreating mortgage rates had sales soaring 9.5% to 4.38 million units. Before the spike, sales had been hovering just below the 4 million unit pace from July 2023 until January of this year. The U.S. labor market keeps holding strong as applications for unemployment benefits remain near historically low levels after falling the week ending March 16th. Initial jobless claims dipped by 2,000 to 210,000. Continuing claims nudged higher by 4,000 to reach 1.8 million for the week ending March 9th. On Tuesday, the Bank of Japan ended the most aggressive monetary stimulus program in modern history as it raised interest rates. The bank's board voted to set a new policy rate range between 0% and 0.1%, ending the world's last negative interest rates. On Thursday, the Bank of England held interest rates unchanged despite a drop in inflation to 3.4%, and hawkish voices dropped their push for hikes. In a surprising move, the Swiss National Bank became the first central bank to dial back monetary policy as it cut rates by 25 basis points. It was its first rate cut in 9 years. If you like this video, please hit that like button and subscribe to show support of our channel. We appreciate you. Stay updated with our news, and our trading desk will keep you informed about our pricing incentives. Happy Friday, everyone, and have a great weekend. Buffy, out.